guys, RC Peck here, and the question is, will there be a stock market crash in 2021? And the reason this is important is because if you believe there will be a crash, then the question you want to be asking yourself is, what will you have to be seeing for a crash to kind of be building and starting? So whether you believe there will be a crash or not, the point of asking this question is really knowing what you'd have to be seeing, what you'd have to be looking at, what you would be missing if you weren't paying attention. And so whether you have money in the market or not, this is also a great question, a great way of thinking. So what I want to do is jump into this question and really dig around and I guess kind of teach or show you the questions that you might want to be asking so you can be informed. Okay, so will there be a stock market crash in 2021? So the thing is, there's very specific things that happen before every crash, And if those things are not happening, it's pretty hard for the market to fall, to crash, whatever. Let's just say a 20% fall is a minimum, but really a crash is somewhere between, say, 30 to 50%. Okay. So let's talk about what can't be happening. Okay, so if stock markets all around the world are breaking out to new lifetime highs, let's say emerging markets is breaking out to new lifetime highs, and the international ex-US stock market's breaking out to new lifetime highs, and the European stock market is breaking out to new lifetime highs, and the Canadian stock market, and the Australian stock market, and the Swedish stock market, and the Taiwanese stock market. But all these countries and all these regions, their stock markets are literally breaking out. But they're breaking out from a base, right? So imagine emerging markets, for example, went sideways for 13 years. Some of the measurements that people use or some of the indexes people use for the European stock market went sideways for 2 decades. So if these indexes all over the world are breaking out to the upside, that is strength, right? Because when price goes higher, that means buyers are coming in, buying more, even though the price is higher. So I just want you to think about this. The price is going higher, breaking higher than it has in 13 years or 20 years or even 3 years, which is the case for a lot of markets, right? A 3-year coil is still a 3-year coil. But these indexes break to new highs, right? They've never been this high. And buyers come in. People come in and buy more. People aren't coming in and selling, right? But people are coming going, oh my gosh, I want more. It's been going sideways to down for 10 or 15 or 20 years. Now it's breaking out. I want more. And so when you see that buying happening, even though the price is going higher, that's a sign of strength, right? That's a sign of stability. It messes with the human brain because the human brain thinks, oh my God, investment vertigo, it's got to crash. Like we're all taught it's safer to buy the stock that went from $100 down to 30 and is now just flatlining at 30 than the stock that has gone from $30 to 100 and is still trending higher. We're taught that the stock that's going from 30 to 100 or that went from 30 to 100 is a more dangerous stock because we're actually taught to think, oh my God, it can fall back to 30. But that's not actually what happens. Things in motion stay in motion until something of equal and opposite force push it back down. And if you have an index trending higher for 10 years and it's a gigantic index, you're going to have a pretty big equal and opposite force have to push back against it. So if there is going to be a crash in 2021 or any year, you can't be seeing indexes breaking out to new lifetime highs, not just like in a teeny part of the world, but like in entire parts of the globe. The whole globe is breaking out, or entire sectors that have been quiet for years or decades are now breaking out to new lifetime highs. So if there's going to be a market crash, what you can't see is new indexes, new sectors, new categories, new subsectors all breaking out to new lifetime highs, because that's a sign of whatever the opposite of a crash is, a new bull market. So in order to know if there's going to be a crash, you have to look to the price charts. You have to understand how to read price charts. So that's the first thing that you can't have a crash if major indexes across the planet and major sectors and subsectors are all breaking out to new lifetime highs. Okay, so that's the first thing. Okay, the second thing is if there's going to be a crash, there's certain places that money goes because it's scared. And before every crash, money starts moving into these places, right? So you may have heard of some of these. Like some people say, well, utilities, the utility sector is a safe sector to be in, or the staples sector is a safe sector to be in, or the real estate sector within the stock market is a safe sector to be in. So within equities, there's types of equities. Value is one that comes to people's minds, or there's a kind of a category or a way you can slice the market for low volatility stocks. So if the market was going to crash, what you'd see is money moving into low volatility and utilities and staples and the safe parts, quote unquote, the safe parts of the market value, because that's what people have been historically taught. Like, oh, that will be safer. Now, whether that's safer or not is for another video. But when you start seeing the quote unquote safe parts of the equity market, of the stock market, start to get new money flowing into it, and definitely new money relative to the rest of the market. So you'd want to see those sectors and slices and categories actually start to appreciate faster in price than quote unquote the risky sectors. So the second thing is you'd want to be seeing parts of the equity market, have people go, oh, I got to get into utilities. I got to get into low volatility. If that's not happening, very unlikely there's going to be a market crash coming. And the thing is, you can measure both these first two things. The first is you can't be seeing new lifetime highs all over the planet in these indexes. The second thing is you'd have to be seeing people coming in and demand coming into these safe parts of the market. Okay. The third thing, and think about this. Think if there are only two assets on the planet. One asset called I'm really scared, and people buy that asset. And the other asset's called everything's fine. Everything's fine. So one of those I'm scared is the Japanese yen, right? If you start seeing the price of the Japanese yen go higher, certainly go higher, then the question is the Japanese yen go higher relative to what? It would go higher relative to the Australian dollar, right? Because oftentimes the Japanese yen and the US dollar both get what bids, like people bid and they push that price higher. So you'd see these non-equity safe havens move higher. US bonds would move higher, meaning the price of bonds would be moving higher. Japanese bonds would be moving higher. You'd also see the yield then go lower. So you'd be seeing the yields on the 10-year, the 7 to 10-year, the 30-year US Treasuries. You'd see those yields falling down because the prices would be rising in those asset classes. So the third thing you'd see is money. You'd see money flowing into non-equity assets, right? Again, even gold. You may see money flowing into gold. But if you don't see money flowing into the US dollar relative to the world's basket of fiat currencies, or if you don't see the Japanese yen increasing in price relative to the Australian dollar, or you don't see Japanese or US bond prices going higher, then it's like, well, if money's not moving in, right? If money's not moving into the safe parts of the non-equity asset classes around the planet, okay? And if money's not moving into the safe parts of the equity market, and if there are new lifetime highs all over the world in indexes, then you're not going to get a crash. I mean, I don't want to say almost impossible. It's almost impossible because money is not flowing. So is there going to be a crash in 2021? If there is, you're going to have to start seeing the dollar get stronger, the Japanese yen get stronger to the Australian dollar. You're going to have to start seeing things like staples and low volatility and utilities and real estate, these safe parts of the equity world, start to really move higher and get people moving into it. And this is the magic of reading price charts. Once you have a price chart set up in a ruthlessly simple or powerfully simple way, you can literally see what is beating what. You can literally see if bonds are outperforming equities. You can see if the Japanese yen is outperforming the Australian dollar. And then you can start to actually build a filter. And so there's the news out there, there's economic information, there's the economy, right? So a lot of people might be saying, oh my God, 2021, there's going to be a crash because of COVID. We're in the third wave. There's a new strain. And on. They're giving you like economic information. They're giving you a narrative, and they're not actually talking about the flow of money. And when I talk the flow of money, the stock market's around $100 trillion. So this is not a trivial amount of money. And there's about 700 million people behind that $100 trillion. It's about the richest 9% of people on the planet. So you can actually track where their money is flowing, and you can use these price charts as a filter to filter out CNBC or CNN or Fox Business News or MSNBC or Twitter or any sort of information that's not a price chart. You can immediately look to the price chart and go, oh, I'm scared, or the economy is in horrible shape, or the economic data for unemployment or whatever is horrible, but prices are going higher all over the world. People aren't buying staples or value or real estate. And so it gives you that filter to know, okay, if we're going to have a crash in 2021, these are the three things we have to be seeing. Thanks so much, guys. I appreciate you being here. If you found this of value, you're going to love the videos you see at the end. And please go ahead and hit the like button and leave a comment. I'd love to hear what you're thinking, and I will absolutely get back to you. All right. Thanks so much, guys. And I will see you on the next video. Okay. Bye.